Welcome to this week's Q&A, and hello to all the Aussie expats out there in the world. This week we're going to be covering some of the proposed changes that have come from this year's budget in relation to the tax residency rules. Last week, if you recall, we went through some of the proposed changes about self-managed super funds, and we've had a lot of questions since then from people asking about, what's their tax residency status likely to be if these changes that have been proposed in the Board of Taxation report actually come to pass. And firstly, I think it's important to recognise a number of things. One of those is that whilst some of these proposed changes can bring clarity, I think some of them probably actually don't really assist the situation any further than it is at the moment. The Board of Taxation would like to introduce 183 bright line tests. So if you spend 183 days or more in Australia in any given tax year, you'll be considered to be an Australian tax resident. And that's fine. Fairly straightforward. However, if you don't, then there are 4 subtests that are proposed. So, and it all revolves around this new 45-day concept. So this paper has come out and said, if you spend more than 45 days, but less than 183 days in Australia in any given financial year, you can be deemed to be an Australian tax resident if you tick the box to 2 of these subtests. And one of them is that you have the right to reside permanently in Australia. So you're an Australian citizen, Australian passport holder, so that you tick the box automatically. The second one is if you have accommodation available to you. Now, for most people that should be fine, because if you have a main residence that you had there that you lived in, the likelihood is that you will be renting that out. So that accommodation is not going to be available to you. You don't have a specific interest or right to make that available to you. And it's important, I guess, then that you don't actually seek to do that. The third one then is, do you have an economic interest in Australia? And if you own property there for one thing, or own interests in businesses or companies or trusts, you will tick that box. So again, becomes important in relation to what's going to happen. And the final one is, do you have family connection in Australia? And this relates specifically to having a spouse or children under the age of 18 there. And this was always something I think that everyone sort of was cognizant of, but there is going to be some clarity there. However, we've got this 45-day test. So I think it's important for everyone to understand and look back and say, do you normally spend more than 45 days in Australia, i.e. on, say, vacation or visiting family there? If you do, then clearly you need to start making some plans in relation to how this would look if this legislation were to be passed in its current draft discussion form. In fact, we don't actually have draft legislation yet, so it's a little way off. The other important thing is, of course, if you work for a company and you might be in a regional role, say based in Singapore or Hong Kong or Dubai, and you need to go to Australia for business. Now, let's look at it, because the Board of Taxation made these recommendations way before COVID-19, in fact in March 2019. So if you had to go there for work, let's say, and you had to go there more than once in a given financial year, then you would be up for 2 periods of quarantine of 14 days each. So basically 2/3 of your 45 days allowable time to spend in Australia would be used up in quarantine. And I don't think that's actually an outcome, obviously, that this sort of recommendation actually had to even contemplate. So I think there are going to potentially be some changes to this, and how the interpretation will then be clarified. So a bit of water to go under the bridge. And that's obviously not a bad thing, because if we're going to plan ahead, you'll need to know all these things. So, the other important thing there is Australia going to continue on its elimination strategy with COVID-19? We would have all seen the news articles in the last day or two about Melbourne having potentially one COVID-19 case, and now it is potentially 5, and restrictions are already being imposed. So very important to consider all of this, because your travel plans, especially from an international destination, can't actually be changed on a flip of a dime. So I think all of these regulations and proposed legislation will need to take some of these things into account and possibly amend some of these recommendations that the BOT has made. So if we take all of that in context, I mean, the next most important thing, if you are going to spend more than 45 days in Australia and you're going to tick 2 of the subtest boxes, is which jurisdiction do you live in? Which tax jurisdiction do you live in? Because Australia has multiple double taxation agreements with many nations and not with others. So if you live in Hong Kong, for example, you could actually have a problem, because whilst Australia has a double taxation agreement with China, it hasn't finalised one with Hong Kong. Or if you're in the UAE, you may have a problem, because if you live in a jurisdiction that does have a DTA, then the tiebreaker rules apply. So in other words, let's say you're resident in Singapore and you're going to spend more than 45 days in Australia in a tax year, and you tick 2 or more of those 4 subtests. The tiebreaker rules should come into play, and if you're deemed to be a Singapore tax resident under normal circumstances, you will still remain a Singaporean tax resident. And the reason for that is, and it comes back to what the rules are now, to where are you domiciled, where do you reside, do you have your permanent abode in Singapore and you don't have one in Australia. So many of these things will then flip back to the current basis of tax residency legislation as it stands at the moment. So lots of people asking us lots of questions, and I think it's really important, as always, to obtain professional or seek professional advice when you're making plans, especially if you're looking to perhaps change your financial situation over the coming year or 2. And please, by all means, let us know if you need any assistance with any of that. We have a panel of experts we can refer you to if we can't assist you ourselves. But it's a fairly complex situation still at this point in time. We will, I'm sure, get some clarity, and as that comes to pass, once we see draft legislation come forward, please ask questions and we can again come and answer those for you. So hopefully everything remains happy, healthy and well for you wherever you are around the world. We'll see you at next week's Q&A. I'm Andrew Unterweger from Wise Guru. All the very best.